All right. Now, earlier I said I might be able to preview some other technical indicators, but I'll only go very quickly in here because I just want to show you how useful some of this can be and where to be able to find them. So another example of an overlay type of indicator is a Bollinger Band. Now, a Bollinger Band is the three lines you see here. Now, the red line is like a resistance line, the blue line is like a support line, and this gray line is like the mid zone of both. So this is a dynamic moving line. Think of it as a dynamic moving channel where it tries to gauge the upper boundary and lower boundary of price, right? We don't have to go to greater detail with this. Maybe one day we'll do another specialized webinar for you to talk about specialized indicators. But for now, I just want to show you how you can use such indicators and you can plot it along your graph. In a downtrend, the way to use a Bollinger Band is to be able to look at where the trend condition is. If the trend condition is down, more likely and most of the time, the price that you see here will trade roughly in between the middle ground and the lower end of that particular Bollinger Band. Okay, so normally in a downtrend, it's very rare for it to go all the way up to the red line. If it does, that means a trend change is taking place. If you notice what happened here. So in a downtrend, it stayed there. And so in a downtrend, the whole idea is use the middle ground of this channel as your resistance line in a downtrend. And in an uptrend, use that middle line as your support line. So in this case, we're in a downtrend, so you should be selling closer to the middle ground and using this as your oversold indicator. And when it rallies back here, sell more. Okay, now when the trend changes, you change your attitude. So now we have got prices jumping above the middle zone, reaching up to the red line. We will only do this if trends are starting to point up. And so it pulls back down closer to your gray area, rallies back to the red line, resistance, and now pulling back to the gray area should be opportunities for you to look for potential buys. So that's how a Bollinger Band is used. But this is an example of an overlay because you see I overlaid it along directly with the price, as against this indicator. Now this indicator is called a DMI or an ADX indicator. That's this one here. Again, it also has three lines. Normally, there is a line called a red one and either a blue or green one. Now, normally the red line is a negative area, or what we call the negative DMI. And this line over here tells you that if it is above the green line, tells you that there is a negative trend that is prevailing here. So again, we're looking at the same stock, which is Meralco. A downtrend is coming in. That's the reason that the red line is above the green line. When the trend changes and you see it seems to be going up, look what happens. The green line crosses over the red line and tends to stay over the red line. That's how you know. It's like the MACD showing you a positive trend and negative trend. So in this case, if the green line is above the red, you're in a positive trend. If the red line is above the green, you have a negative trend. Now this third line, this black line you see here, is what we call the ADX line. The DMI is actually these two readings that you see. The ADX is this black line that you see here. Now the ADX line is a force index line. That means it's trying to tell you how strong the trend is. Now, it does not care about direction, right? So if you see this black line, if you see the black line picking up, that means momentum is increasing. But please remember, it doesn't care whether it's up or down. What will tell you up or down is this red and green line. So in this case, it's down because the red is above the green. But when this is picking up like this, that means momentum is increasing. If this black line is dropping down like this, that means momentum is decreasing. So let's interpret this area here. Red line over green line tells you I'm in a negative trend or downtrend. Now, your ADX line going down tells you that downtrend is losing force. Okay, that's what this is trying to tell you. And that's why it's anticipating a potential reversal condition here. Now, when this shoots up, the uptrend now will change. As you see over here, it climbed up enough to be able to turn the tide on the trend. And now there was a bit of strong trend here, but then it weakened. Because of that, you can see momentum turn again, and it's starting to be able to head downwards. What happened? Stock starts to consolidate. In a consolidation, there is no momentum. And that's the reason why your force index line or ADX is going down. Once a breakout takes place and prices seem to be moving back up, you can see that your ADX is starting to pick up. But this time, this is an upward force in what trend? The green line is above the red line, telling you you're now into an uptrend. Okay, so again, we can one day go very specifically into what these indicators can do. I'm just showing you how powerful these indicators are if you know how to use them well, especially if you attempt to be able to put them together. Let's use one more. Now, the other indicator is called the stochastics indicator. Now, stochastics is this indicator down here. It works just like an MACD, so to speak. However, this is a combination of like an MACD built with an RSI. All right, so it does two things. It records short-term momentum, and it also gives you an overbought, oversold indicator. So it's a combination of two indicators in one. So if you see here, we have an overbought line, which is gray line here. We have an oversold line, which is this bottom range here. And you have two lines that are crossing above each other and crossing below each other. And this, like an MACD, gives you a cross up, which means a buy, and a cross down means a sell. Now, one little note, a stochastics indicator is for short-term trading. Okay, and when I say short term, you shouldn't be looking for very, very radical periods here. They move very, very, very quickly, and that's why you note here up, down, up, down, up, down, up, down. So it's really for short-term trading and not for medium or long-term trading. However, if you want to use the overbought, oversold gauge, that can help you, just like an RSI can. So for example, if you see this crossing over going up, you more likely come after a major correction in that it has now built inside enough power to be able to pick up again. But look, after a little bit of a rally, the stochastics goes all the way up to an overbought indicator. And because of that, that's the reason why you're seeing it's winding here for a while. Okay, and once this finishes its wind, then maybe it can punch up. But what this guy wants to do is he wants to come down maybe a little bit more here before it tells you that enough correction has taken place before the next advance will be happening. Okay, so I previewed you the Bollinger Band, the DMI, and the stochastics as added tools that you might want to have a look at. Maybe one day, like I said, we'll cover this in a different type of seminar. But the engagement of this is using technical indicators and how if you combine them along with prices, they can prove to be very useful.